think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today I have the pleasure to speak with David Rhodes. We're here at the Rural Symposium. David is a part of Empress Royalty. And so, how you doing today?
Good, thank you. No, thanks for having a chance to chat to you guys. Thanks.
Yes, indeed. Yes, indeed. So, my channel, we reach, the average retail investor and just to get in position for the commodities bull market. And so, to my understanding, you believe that we're in a commodities bull market?
Sure, definitely. So, two types of commodities. There's the base metals, which obviously copper, as an example, so different to the precious metals. And obviously Empress, the royalty company, is purely precious metals. So gold and silver are the key metals, and it's linked to the dollar. Dollar weakness means it's cheaper to buy gold and silver as an investment, therefore it goes up. And interest rates play a factor in that as well. But we're very bullish on gold and silver.
Yeah. So what would you say, like the CapEx or the amount of investment is going into resources right now? I think, our government, at least here, governments around the world have pulled investments from like either fossil fuels and things of that nature, and these like commodities are needed for our production, our growth as nations. I mean, and so
yeah. Well, and it's interesting. The US is leading the way here. I mean, the infrastructure bill. There's lots of investments, available now for processing and mines linked to the US really supply in that sense. The trouble is, a new mine takes 15 years. You've got to find it, you've got to find the money, and then you've got to start building it. So from start to finish, it's 15 years or longer in some cases. To do that, you need a higher price. You're not going to build a mine and spend $1 billion to do a copper mine if the price is low. Mm-hmm. The price now is below $4 a pound in copper. That's not enough to get new mines. Yeah. So on the base metal side, you need copper for your electric cars, for your transmission lines, your new houses. You need copper as an example for, as a GDP metal, as I call it. You need a high price to get building $1 billion copper mine and time to find it. So we've got and a lot of people in the industry, not just myself, are talking about the shortage you're going to get in that metal, in copper. There's a copper shortage coming, and that means the price is going to spike. It means obviously your investments in existing copper producers will go up because the value of their companies are more, and that'll drive more development of copper mines to fill that supply gap. But at the moment, weakness in China is pushing the price down at this point. And China probably buys most of these commodities. So they can decide whether they're going to buy or not. So a lot of people view it's just China playing with the market. They're just saying, okay, we're not going to buy these, over this period. Prices go down. Once the price is down at a suitable level, then they'll buy again because they're getting it cheaper. So there is China is one of the major buyers, and obviously their housing market is suffering a bit. But economically, they've come out quite a few times economically saying we want to drive and expand their economy. And that, I think, is good for metals on the base metal side.
So silver is used as an industrial and / monetary metal. So how much do you think it's more industrial versus monetary? Like if you were to come up with a percentage?
I'm not clever enough to work out the percentages, to be honest. But I view gold and silver purely as they aren't really industrial. So silver does have some uses, but in reality, that was the olden days when it's used in Kodak films, a lot of silver. Now, both really, in my personal view, gold and silver are, precious metals, purely for investments, purely for store of value, also protection in a negative downturn in the economy. And it always has been. And if you look at the gold prices, example, and silver prices, they're doing very well compared to, the historical prices of those metals. So showing really the value to investors of holding that commodity, reflecting really where the world is at the moment, which is high inflation. We're just, in my personal view, at the tipping point of seeing that recession coming towards us.
Yeah. So what's your take on the current gold to silver ratio? I think it's close to 80 something to 1. do you think that ratio needs to come, down some at some point? I mean, obviously the historical ratio is like 13 or 17 to 1 or something like that.
I think that says it all. I mean, I've been long enough in this business, and eventually things come back to the norm. But we're in a world where money is, moves quickly. Everything happens quickly now. There's no longer a long cycle; it's a short cycle. And also, the reactions from the Fed and reactions from central banks is quick as well. So they act quickly to those movements. So yes, I think it has to come down, to the near the norm, and obviously that's positive for precious metals.
Yeah, definitely. So, what's your take on? We have the Fed coming out this week. We have producer price, inflation. We have so we still have these macro dynamics that are on the horizon. I mean, the yield curve is still inverted, right? Yeah. So what's your take on your view on like how this plays out, and what's the importance of having precious metals during this time?
Well, we're still in that. We were doom and gloom. Let's be honest. The stock market was going down. A couple of months ago, it was pretty poor. The tech guys had led the market down. We were all very gloom. Recession was coming. Inverted yield curve, as you say, is an indicator historically for a recession. So everybody was doom and gloom. And then suddenly we've had this bounce up. Consumer confidence is back up in the US. Everybody seems to be, it's not so bad. But inflation is still high, relatively. Interest rates are still high, so everything's costing more. But we've not yet seen that reaction in the market. I don't understand with those factors why the market did bounce up. But my personal view is it's not going to last. It's not going to last. Those factors like inflation, high interest rates are going to affect the economy, which means there will be a reduction in demand. There will be a collapse to a degree in the stock market, and that usually is a good opportunity for those who've got gold and silver in their portfolio, because that stores value. And if the dollar does weaken, which we're seeing, a lot of the experts are talking about the BRICS forming their own currency. And I think the end of August, I think 22nd of August is the date someone's mentioned they're going to bring out a new currency to rival the US. If that happens, there'll be a lot of people selling US dollar. That is always very positive for precious metals. So see gold and silver really bounce up if on the 22nd of August, they do set up their US dollar, opposition in their currency.
Yeah, definitely. So Empress Royalty, you all do royalty and streaming, right? And so for the audience, correct me if I get this wrong.
Well, I can say. Shall I say?
Let me try it. Let me try it. Y'all have been learning here. Let me make sure I get it right. All right. So royalties are pretty much you earn it. Companies earn a percentage of the mine. Streaming, they get what is mined at a cheaper price. That's like the simplest way I could say it, but you may be able.
No, exactly right. So we invest money in mining companies, and they pay us back with either a percentage of the revenue, so dollars, or a percentage of the metal over the life of their mine. So we get gold and silver coming from some of our investments. We've got 3 investments, so gold and silver coming from some of them, and the other ones we get checks, from them in that sense. And it's a long-term return for our company. So obviously, the alternatives I do equity, but equity is at the moment tough in the market, and it's most companies are undervalued, so they don't want to raise equity. So it's low, high dilution for them. The bank debt you got to pay back in 3 years, or 5, so that's pretty difficult for some companies. While streaming and royalties are a long term, so we invest the money now, and you pay back a small percentage in the future, forever in the future, and that basically is quite a nice tool for long life assets. No stress of debt, and obviously equity, as I say, is highly dilutive at the moment. So no one wants to do that.
So in a recession, usually like production slows down or whatnot, but I'm sure mines still have to operate. Like people still need jobs, still need financing, probably need more financing during the recession. So how does this look for royalty streaming companies during, if we have a recession, that comes?
So if you're in the base metal space, so the copper and the recession happens, there'll be less people buying goods. So the base metal side will obviously fall. There will be stress in the marketplace if, the copper and the nickel mines, their price goes down. Inflation obviously is increasing, so your margin's getting squeezed on those mines. So that is difficult. So there will be stress, no dispute. Empress is only in precious metals, so we're gold and silver. And as we just spoke about, we believe those prices are going to go higher in a recession. The US dollar weakening is good for those metal prices. So the margin of those companies is going to stay strong. And obviously that's what we invest in. So we actually feel we've got a good pipeline of opportunities, and our existing portfolio is safe as well because it's in precious metals. So good hedge is probably not the right word, but a good investment in a recession.
Mm-hmm. Yeah, that's good. That's good. And what's your view on the dollar currently? We had a big move up, last year, and then it's kind of leveled off and everything. What's your take on where the dollar goes during this time?
Yeah, well, it's I take the view that if you look at the balance sheet of the US, you got trillions and trillions of debt and only a few trillion of assets. I wouldn't invest in a company like that. Mm-hmm. And as a result of that, the dollar's got to weaken. Yeah. And also, if this BRICS guys come out with a counter currency to the US, the 22nd of August or whenever they do it, then that's really going to hurt the dollar, because that's, I think, 50% of the wealth is in the BRICS association now. I think 75% of the population are under that. So that would be a massive shift against the dollar. And here at the conference, there have been a lot of people talking about that, talking about the concerns for the economies, what happens if that happens. And obviously here we're talking about the value of precious metals, because if the dollar does weaken substantially, people are selling it to go into another currency, and that's going to drive precious metals through the roof. And that's the excitement for us metal guys here. Yeah. May not be good for people's portfolios, but it's very exciting for us.
So where can the audience learn more about Empress and the services you all offer and your investments?
Sure. So we've got a website. So please look at our website, Empress Royalty. And obviously the contact details are on there. So please get on our website, give us a call, email us. We're listed on the Toronto Stock Exchange and also on the US. The QBX, I think we're on. So please have a look at us and give us a call. We're very open, as like doing these shows and obviously being at the conference here to chat to people. And if it doesn't come, just to give you opportunity to learn about what we do, royalty streams, what do we do in our business. So please give us a call.
That's good. Well, thank you for coming on, David. You all be sure to click the link in the description. I'm going to have Empress Royalty's website there. Be sure to click on that link and check them out. Thank you all for joining.
Great. Thanks for the time. Appreciate it.